Hey, what's up everybody? This is your boy Doughboy Zeus with Legacy Trades, and today I'm just going to give you a brief lesson on support and resistance levels and the fucking magic behind them. And yeah, let's try to make this super simple and easy for you guys. So if you don't know what support and resistance is, it's basically areas or price levels where price usually bounces off of or rejects. So you can say your support is like a floor. You take a bouncy ball and you throw it on the floor. What's it going to do? It's just going to bounce off of it. So that's your support. Now same with the resistance. Resistance is your ceiling. So you throw a ball up in the ceiling, bouncy ball, soccer ball, whatever. It's just going to come back down, right? It's going to reject off that ceiling and come back down. Now that's basically how price, where these candlesticks act. They act like a ball. You know, they're just bouncing back and forth. And here we go. We're going to show you how to mark support and resistance, or to make it easier, floors and ceilings. So here we go. Anyways, we're gonna take fucking Jimmy over here, or Johnny, or Timmy, or Juan, or whatever the fuck you want to call this asshole. This motherfucker just bought a new crib, right? He bought a new house, put new ceilings in it, new flooring. But this motherfucker likes to play basketball. He's a fucking athletic asshole. So he brings his ball around and just dribbles it everywhere. This motherfucker throws his ball on his brand new flooring, and guess what the fuck it does? It bounces off the floor or the support. So basically price is this ball. It comes down to support and it bounces. And then when the ball bounces off the fucking floor, guess where it goes next? It goes to this fucking ceiling or this resistance. And then it comes back down, back to the fucking floor. And you can only imagine what's gonna happen here. You're damn right, it fucking bounces back up to the ceiling. And I got $1 for somebody, whoever knows what's gonna happen next. Yep, you're damn right, it's gonna fucking come back down. But this time it comes and breaks through the fucking floor. Anyways, as I was saying before I got cut off, so Jimmy's fucking ball rips right through this fucking flooring, this brand new ass flooring. God damn you, Jimmy, your fucking wife's gonna be mad. She's gonna leave you. Better get your shit together, start making money in the stock market, because it's not looking too good for you, buddy. So anyways, this motherfucker's ball rips right through the damn flooring, and you're probably asking yourself, how come it didn't bounce off support like it did the last 2 times it touched it? Well, that's because price can only bounce in between a support and resistance level for so long before either breaking up or breaking down. Let me tell you something. So the more times a support or resistance level gets touched, the weaker those levels gets. So right here, you can see we have 1 touch, 2 touch, and it barely even have a 3rd touch. It just ripped right through it there. But right here has 1, 2, 3 touches versus these just 1, 2, man. If the ball would have came back up here, there's a chance it could have broke up here as well. And so just think about it like this. You take a piece of drywall or a cracker, for example. I actually have a cracker right here for my example. So if you just keep poking at it, you see how I'm poking the fucking cracker and it's just getting weaker. It's starting to get brittle. Boom. The more touches a fucking support or resistance level gets from price, the weaker it gets, and eventually price is just gonna break right through that motherfucker, like this cracker. Wife's out of town, so I'm living off of crackers until further notice. Hope I was able to help you guys kind of understand a little more about what support and resistance is and how we use it in trading. I try to put it in elementary for you guys, just, you know, not talking shit or anything. Support and resistance was one of the hardest things for me to learn. I don't know why. I didn't have anybody put it down like this for me. But anyways, it's simple. Support is your floor, resistance your ceiling. And then right here, this is what we consider this a breakout. When price penetrates a support or resistance level, we call it a breakout. And those are the type of that's what we're waiting for. We're waiting for price to penetrate a support or resistance level so we can catch the breakout. We're gonna try to enter at the breakout. But it just all depends on your style. So let's say if you're a breakout trader, you're pretty much just waiting for price to penetrate a support or resistance level to enter a trade. So let's say price is pretty much ranging in here, bouncing in between a ceiling and a floor, a support and resistance. We consider this a range. So we basically just wait for price to break out of a range. So when price is ranging between support and resistance, we're just waiting. We're just waiting patiently for a break to the upside or a break to the downside. And waiting is very hard, and this is a game of fucking waiting. And sometimes you'll get these fake breaks, but we'll talk about that later. Anyways, so this is what breakout trading is. You're waiting for a range to break out to the upside or to the downside, and you're pretty much just gonna enter here. You'll take a position here, or if it broke the upside, you would take a position here. And so, like I said, it depends on your style. There's many ways to trade, many ways to make money in the stock market. You could be a bounce trader, which focuses on bounces. So you would notice that it bounced here once. So you just wait for price to come back, and you pretty much just buy here. You'll buy at the second touch or third touch or whatever. And, you know, you enter here, you sell up here, you make money. Same with the rejection. You can play inside the range, and you can wait for a rejection here. You'll see the first rejection, and then when price comes down and then it's coming back to test that area where it rejected the first time, you enter. You take an entry here, you short it, you enter here, sell it here, you make money. So you could play the bounces like ping pong. It's like playing ping pong, that's what I call it. Or you could play the breakout. It doesn't really matter how you play, what you play, but you just have to know what the fuck you're doing. You know, you just can't take a wild guess. But me, I would consider myself to be more of a breakout trader, although I do play some rejections, I do play bounces, I play reversals, continuations, but mainly I like to look at patterns and wait for pattern breakouts. And so now that you guys have a little idea of what support and resistance is, you know, we can move it over to a chart, and I can show you guys how to market really easy. Just keep this in mind, and here we go. Alrighty, so boom, this looks very fun. This is overwhelming. Scary, get it away from me. I don't want that shit over here. Anyways, let me show you how to fucking make it easy. We're just gonna fucking look for points. We're gonna look for big, sharp points. So right here, we're gonna start off with this little area. You gotta dissect the chart. You gotta kind of break it down in little pieces. You can't just look at it as a whole, because then it's just gonna get retarded. Anyways, right here, you can see that we have 3 points that meet up. I don't know if you guys can see it, but right here we have a nice sharp move to the upside, and then sharp move to the downside. Another sharp move to the upside, sharp move to the downside. Another sharp move to the upside, slight sharp move to the downside. Not quite though. And I'll let you know why in a little before I get ahead of myself. But you guys can see that these 3 points, if you were to draw this straight line on it, they would actually meet up. So we're just gonna plot a line there, and I'm gonna kind of solidify it. Okay, boom. So I made the line solid, and I made it a little thicker for you guys, so you guys can see it better. So I'm gonna remove these little crazy lines I drew. These were just to show you the sharp moves that we kind of look to identify these points, or these rejection and bounce areas. So now if you take a look, what do we have? We have a fucking ceiling. We have a fucking resistance. We have 1 touch here, we have 2 touch here, we have 3 touch here. And now guess what price is doing right now? It's fucking at this ceiling. So what could we expect here? We could either expect price to come back down, or price to rip right through this fucking ceiling, which I actually think it might do, because we didn't have a sharp move down here like we did. I mean, we didn't have a sharp move down here like we did here or here. It actually was a... Okay, and then boom. So remember how we dissected this? Now let me show you some fucking witchcraft. I'm gonna show you some fucking witchcraft. You better not fucking hang me on a tree or something. Remember when we just plotted these little points? I didn't even look to my left. That my left? Yeah, I didn't even look to my left. I just said, let's just focus on this little area right here. So these support and resistance level, they have been touched in the past. History repeats itself. It's just known that the market, you know, just does what it did in the past. So if you look at over here, what? You mean to tell me that this used to be a floor or a support, but now it's acting as a resistance? Yes, this level right here is a support turned resistance. That's what we call it. I just call it a key fucking level. Now let me just draw some circles and shit to make it easier on your eyes. So remember, we have one touch here. We have one touch there. Another touch here. We have a touch here. We have a touch here. Big old touch here. Here. And here. Look how many times we fucking had to bounce off this shit until we finally fucking broke right through it. Then we came back, retested it once. Tested that level again twice. Thrice. And we might actually go back up to break this shit, which is gonna be fucking sick because now I'm gonna play Microsoft next week. So kind of forgot where I was getting at this. Anyways, hope you guys are actually picking something up from this. I know it's helping me out, refresh my memory a little bit on the basics and the foundations of technical analysis. So in this case, this level acted as a support for price until we broke through, came back, retested it, and now we're acting as a resistance. So you guys know a support versus resistance, and a level could act as a support and then turn into resistance, and vice versa. It could be resistance and then turn into support. So now we're gonna just keep taking some more lines or finding points. So if you were to just draw points, one point here, another point here, another point around here, and then maybe this point, and then maybe this point over here. What do they all have in common? You take a straight line and you can hook all those up. You see how all the dots match up with my little dotted line? Look, I'm gonna put a line there. So now I'm gonna remove the dots so you guys can see this a little more clear. Hey, you guys, back to this little drawing because it's gonna be very helpful here in this scenario. Remember when I said that when price is trading inside a support and resistance level and just bouncing in between, that's considered a range? Well, there's another term as well you can use. It's consolidation. So price is basically consolidating here, and what that means is that the buyers and the sellers are pretty much fighting each other, trying to see if the buyers are going to drive the price up or the sellers are going to win and drive the price down. So that's all this is really is right there. And here's a good example, and the reason why I want you to use this is because of the breakout example. So just look at this picture. Now we're gonna add some freaking lines. We're gonna add our lines back on here. I took them off because I got in the way of my picture. But remember these three touches here, and then remember we went and circled all these touches here. What is this? We just went over this on the little picture I drew you guys right there. It's basically support and resistance up here, and the price is just bouncing in between. So you have a support and you have a resistance. This whole little consolidation or range, it's a fucking range. And remember what I said, we're gonna be patient and wait for price to either break up or down. So that wasn't a scenario for a breakout trader. Now remember what I said, you could play inside the range as well and pretty much play ping pong in between a support and resistance level. So right here you'll see that price came down, right? It bounced off here once, but that was the first touch, so you wouldn't have known it was going to bounce there. But then what, it came back up here before it made a sharp move back down again. So you're just going to mark this because it's important, you know. Now we created some point where we come back down. So now when price came back down here and met up in this area again, you could have bought. You could have bought some shares, you could have bought some option calls, and then came back, you know, waited for price to come back up here to the peak again, and you sell your position there. So that's playing ping pong basically in between support and resistance. Or, you know, if you wanted to play the rejection, it's pretty much the same thing. So it's pretty much the same ideal with rejections. It's just you're playing the tops to bottoms instead of bottoms to top. So right here you would have noticed this was our first rejection. Of course you don't know that it's gonna reject there, so you wait for price to make a move down and come back up to retest this area again. So right here we tested it. You're not gonna get in immediately. You're gonna wait. You see a green candle, you're not gonna get in for downside position. You're gonna wait for some sort of red, maybe like this candle, before you enter that rejection. So right here you notice that it rejected in the past there, and now we're gonna fall again. And you would pretty much write it down to this point right here where it was the last two bounces. You take profit there. And then right here again, price came back up to that point again. You could enter rejection again, make a little profit again, and then once it comes, hope you guys pick something up here. You know, we went over support and resistance levels. I showed you guys how I find them on the chart, how you can play, the multiple ways you can play to make money off these lines, whether you're playing rejections, bounces, or breakouts. And it's 3:33 in the fucking morning, and yeah, so I'm just gonna mark all these lines, and then just mark all my support and resistance levels that I see that pop out on me, and then maybe I'll post it, and then you guys can see what I see, you know, see how I see it. Hey guys, so this is what it looks like after I get done marking my support and resistance levels. As you can tell, they are a gazillion. Support and trend line is acting as a support, so we didn't really touch base on the full support and resistance. Or like this trend line right here is a resistance there, resistance there, resisting there, and then, you know, we got more support here. We got price supporting, there's line supporting price going up here, but we're not going to get into that. Now, I just wanted to touch base on this very briefly so you guys aren't confused. There's two types of support and resistance. We have a static support and resistance and a dynamic support and resistance. And if you guys don't remember from when you learned in school or whatever, you just weren't paying attention, fucking static means that it stays the same. Dynamic means that shit's changing. So what I mean by static support and resistance, it means that it's fixed to this price levels. These horizontal lines are fixed. They don't move. They stay the fucking same. I do not touch them for nothing. I just leave them how they are. Now, when I say dynamic support and resistance, I'm talking about these trend lines right here. You see, we have trend line here. We can have a trend line there. We have a trend line here. If I wanted to, I could add one here. And you see how it rejects it? It's supporting it here, but rejecting this big old one. That's because it's always fucking changing. These support and resistance are changing. And it doesn't just end there with it doesn't just end there with the trend lines. You know, we could also add a moving average to this. Let's say we add the 50 moving average, this yellow line. It also acts as a support and resistance level. If you look at history back here, you can see that price was above it, came back down, and it bounced off it right here. Came back down, bounced off it right here. It is a dynamic support and resistance. Again, here we have it rejecting. So right here it came down, boom, and it came near it, rejected it. These aren't the best examples right now. The market's pretty trash. But right here you can see where price is clearly just holding under this moving average, and when it touches it, it just falls down, and then up here vice versa. it's holding the price up, and every time it touches this line or this yellow line, it bounces up. Right here again, boom, bounces up, but it's moving. So I just wanted to get that out the way. Reminds me I have to teach this to one of my mentees. But okay, so now you guys see my levels, you guys see my lines or whatever. And that's basically how I mark my levels. And you know, I use trend lines as well, but this is mainly how I use my levels, and I'll show you guys. So my first step is always marking these horizontals. And these, I can leave them up for a day, for 2 days, a week, a month, and they're gonna be respected. I can play these all day, every day if I wanted to. Now, the way I like to use these is I like to enter price right at the line, whether it's breaking, rejecting, or bouncing. I like to enter right at the line, but I don't just enter when it breaks. I mean, you can see that it broke here, it broke here, it broke this line, it broke it there. I have to see a pattern with it, with the bounce or breakout. So let's say, and this is why I say I'm a pattern breakout guy, but I also combine it with these levels. So right here, I see a pattern right off the rip. It looks like a flag or a fallen wedge. You know, you guys are pretty familiar with this stuff. Let me see if I can find a photo of it. Okay, boom. Okay, so now we have this fallen wedge pattern or bull flag, whatever you want to call it, regardless of whatever you want to call it. It's a bullish continuation pattern. We have this nice fat run up, we have some consolidation, and now we're trading in between these two levels right here. And this is why I mark my levels, because they determine where I'm going to enter, where I'm going to exit, where I'm going to take profit. Or exit as in where I'm going to stop loss, pretty much get out of my position. So right here, you're pretty much going to enter on this breakout of this pattern, but also a breakout of this level. So I like to see two confirmations. I like to see a level breakout plus a pattern breakout. So in this case, you would enter here, enter on that break of that dotted line, and you'll take profit on the next dotted line. And I'll show you what it looks like before price action came by and took it out. Alright, so right here, I wouldn't enter on the pattern break alone. I want to see it clears this level first. And why is that? Because if I was to take a position, let's say it does break here, and if it doesn't clear this dotted line, there's a chance that it could reject and come back down. You know, it could reject right here and come back down. So I want to see it break that, enter here, while it's breaking the pattern and breaking this level at the same time for double confirmation. And you know, the level is more important to me. The pattern, you know, it just kind of acts like a cherry and some sprinkles on top to let you know that you're trading in the right direction. So if I'm looking at this line, you know, I know that, okay, this is a bullish continuation pattern, so obviously it's going to break to the upside. You know, once it rips this line, then we're going to continue up higher. So now we're going to fast forward it and see what it looks like. So here we go. We fast forward it. Boom. Not entering yet. Not entering yet. Not yet. See, it's starting to break. You could take a light entry there, starter position if you want, but I wouldn't even get in yet. Nope, not even there. I want to see that. Boom. When you see that green candle and you see a nice clear breakout on this pattern plus a breakout on level, you enter here. You enter at that candlestick, and then you're going to take profit on the next level up, because that's the next area that it could potentially reject. So in this case, next day comes, boom, we got hit with a nice big green candle. We touched that dotted line to the T, and guess what happened? We came back fucking down. I don't know how much more down we go. Okay, boom, we came back down to fucking retest that level we just broke out. So that'll be your entry. This would be your entry here, your take profit level. And as far as your stop loss go, it just really depends on how much you can stomach. You know, just your risk tolerance, whatever it is. But you see how price is holding this level right here? Like price is just holding right above it. You can use this line. If it breaks this dotted line to the downside, like comes back down and breaks it, you get out of your position, you sell it for a loss. Or as soon as it breaks here and you're kind of up here already, you can set a stop loss right there. If it breaks back under this dotted line again, like if it doesn't hit you with a big green candle up but it just decides to U-turn, then you would get stopped out pretty much for break even there, or pretty close to break even. So that's how you would play that, and that's how I combine patterns and levels together. And yeah, there's a little more to it, but this is basically the best way to do it, is to keep it simple, stupid. Anyways, we're gonna compare these two. We're gonna compare the live chart example that I just charted out with you guys versus the textbook example of a fallen wedge. As you can see, we have our nice pull. We have a consolidation right here. We consolidated, then we broke up. We have our entry, we have our stop loss, and we have our target up here. So I don't think I can make a more perfect example, but you guys just got some free ass game. So screen record this shit or download it or something. I give you permission. It ain't gonna be weird if I see the little screenshot, little picture on my thing. But hey, this little pattern right here can make you a lot of money if you play that shit right. Now I just want to show you guys one last thing. I don't even think I got to show y'all. But here's a beautiful example of a fucking range breakout. So remember when I was talking about that price likes to ping pong in between, and we just like to wait for fucking price to break out? So you see how price is just kind of bouncing in between these two lines like it ain't nothing. And then we're patient and we wait for a nice break. We would enter here. And where would our profit target be? The next line down. You see how it just perfectly came back down and bounced. Anyways, here again. But this time it did it right here, but broke upside and went to the next level up. So you would have entered here on the breakout of this range, entered here when it broke out, and take profit on the next level. And it could be that easy. And to make it even easier, what I like to do when it comes to ranges, I like to build boxes around them basically. So I like to put them in rectangles. So I'm just like, boom, if it breaks this rectangle, you can enter on the breakout of the rectangle. Or, you know, this rectangle. If it breaks that rectangle, you go to the upside, and, you know, here's another one. Look, we can draw a rectangle there. If it breaks this rectangular box right here, penetrates right through it, you take a short position. You would enter right, I'm looking for my pencil tool, give me a minute. You would enter here and take your damn profit right here on the next line. God damn. I mean, you see how simple, the ranges could be pretty simple. You just draw rectangles and you just wait for them to break.